in this package.
Okay, Philippe Legrain, I mean, your view on this, I mean, you know that there are people, economists like Joseph Stiglitz, a Nobel Prize-winning economist, who says if there's no extra money, no stimulus, that this means that Europe is going to be buying less, and actually it's going to make matters worse because it could lead to a double-dip recession. I mean, are we doing the wrong thing in Europe by saying we ought to cut our budget deficits quickly?
Well, clearly there is a danger that if all governments try to cut back at the same time, that the fragile recovery could be compromised. The problem in Europe is that markets are forcing their hand, and that's the panic element. And some countries which might have been advised to cut later are having to cut sooner. But the most important thing actually is to generate the future growth. I mean, debt, you can grow your way out of debt. First of all, we need to restore bank credit to small companies. Big companies can borrow again, small companies can't. That's true in Europe, and it's true in the United States. Second of all, we need to do more to encourage, the small entrepreneurial companies which could become, the future Googles. And in that respect, Europe has a lot to learn from Silicon Valley. Thirdly, we need to do the things that Emma was talking about in terms of structural reforms, in terms of making labour markets work better. Regularising the situation of migrants again is a very good policy. And then above all, we need to tap into the immense growth and dynamic potential of China, of India, of Brazil and other emerging economies. I mean, at the moment, the world economy is actually growing at 5% a year, as fast as it was just before the crisis hit. And the thing is, it's nearly all in China, India and Brazil, and those countries.
Growth in the Eurozone could be at 1.2%.
And if we can tap into those markets, export to them, then that could provide a huge motor of future growth.
And of course, a low euro makes European exports pretty cheap, doesn't it?
Precisely.
Irwin Stelzer, on this question of budget deficits, I mean, you know that perhaps the US Treasury Secretary Timothy Geithner has suggested to the Europeans, to Germany in particular, the Finance Minister Wolfgang Schäuble, that perhaps you shouldn't cut too fast, and you have to approach this in a balanced way. Do you think there is a little bit of disagreement there between the Germans and the Americans?
Well, yes, there certainly is, and the Germans will always want to err on the side of what they consider fiscal responsibility. Look, this is a very difficult process. It's going to involve establishing now a credible plan for gradually reducing fiscal profligacy. This is the thing that George Osborne is going to have to undertake in the next, 40 days now. The thing is to say, look, this is how we're going to do it in the long run. We're going to do all those things that everybody on this program has mentioned. In the short run, we can't tighten quite as much, but also nobody has mentioned yet the role that the European Central Bank has to play, because in addition to buying sovereign debt, which they're doing, they're going to have to monetize it. There's going to have to be easy monetary policy while we tighten fiscal policy. Economists are very good at telling you where you should be. We're just terrible at telling you how to get there.
All right.
And it's going to be a very difficult job.
All right. And very briefly, Emma Bonino, could there be an impact on the way that the European Union is run as a result of all this? Pierre Lelouch, France's Europe Minister, says the Eurozone's $1 trillion rescue scheme is tantamount to an economic government for the bloc. Are we going to see a fundamental difference in the way that the EU does its business?
Well, I think that everybody understands that we should move faster on the economic integration and in a more political European Union. And everybody knows the real problem is that then, awkwardly enough, member states are not apparently willing to move in that direction quick enough. But everybody realized, and I think that, as I said at the beginning, what happened in one night is a major change in the normal way of Europe of dealing or on making business. Unfortunately, you need an emergency to make Europe moving.
Okay, Irwin Stelzer, final word here. Are we going to see a change, perhaps? Are we going to see banks collapse and different way of making sure they don't in the future or whatever?
No, I don't think you're going to see. You're going to see banks having major problems. And you may, like in Spain, have to have smaller banks consolidated. I just don't think it is written in stone that we're going to have a huge financial crisis. We're now paying the piper for years of mismanagement, excessive debt, and so on. We can control the process. Do we have the political will and wisdom to control the process?
Okay.
I just don't know.
Final word to you, Philippe Legrain. You've just written a book, Aftershock, Reshaping the World Economy After the Crisis. What is going to happen after the crisis?
Well, I mean, as I said, the future challenges are, you know, reducing the deficits, paying off the debt, and above all, generating a future growth. And that, I think, one of the striking things about going around the world to research the book is how in Europe and America people are incredibly gloomy, people in China and India are full of optimism about the future. And if we are going to embrace those changes, if we're going to invest in the future, we need to rediscover that optimism here in Europe and also in America.
Philippe Legrain, Irwin Stelzer in Washington, and Emma Bonino in Rome, thank you all very much for coming on Hard Talk.
Thank you.